The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Friday, market days, 11 o'clock till noon Eastern Time. Two great hours always come before me, 9 o'clock till 11. Steve Rhodes does 2 hours on a Friday. Tom joins Steve, or he comes in with Daryl Martin, as you just heard. 10 o'clock show, fabulous show, great information. And we just go all the way through the day. We've got, what we've got? We've got, after my show, you've got, the health show, of course. And that's always really interesting. I always laugh because I'm busy eating something that I probably shouldn't be eating for a while. All these great eating habits are discussed, or potential eating habits that one should have. But I take it in and I try my best to observe what's being said, and it's just great information. Daryl Martin comes in, of course, with his diagnostic trading hour. You've got Dave White, who developed the program that's on for TFNN, where he put together Tom's fabulous book on timing the trade, and it's the art of the charts. You've got Tom O'Brien comes back 4 o'clock till 6 o'clock. I believe we got a show now at 3 o'clock on a Friday. So just a full house. And today will be, starting today, going into the end of the weekend, where you'll want to be living a primer lifestyle, of course. This is the last period in which you can get those Tiger dollars. They're really important. I mean, not only do you get a 25% bonus, but listen to this. You get Tom's 4-hour live webinar on Tuesday discussing ETFs, how they made up, how he suggests trading them, what he looks at, how he does it. Just a fantastic show. Just something, I don't know where else you'd get it. So this is part of what we have here at TFNN. So please consider, you want to renew my opening call, great time to do it. You get a 25% extra bonus to be able to put to work. Any of the services here at TFNN, you want to get the archive of my, a week ago today, I was doing the Master Trader Series, the Chapman Wave Methodology Level 1. Just a very thorough look at how you can gauge the market peaks and what you look at for the troughs, how you use these technical tools. It's just really important information if you want to be able to look at the market, and at the same time, if you want to be able to, probably the best way to put it is, if you want to be able to assess and grade the peaks, if you want to be able to look at chart patterns that repeat over and over, the same patterns I'm showing you here. You've got the E-minis, the daily on the left, the 120-minute on the right. There's a rising wedge formation. There's that resistance right here. 1792.75 is the high today. 1793, maybe 1790. Let me just do this because it's moving. I could even say up to 1795. You break above 1795 decisively, and you've broken that. That's very positive. But there should be some resistance here in leg D in the daily E-minis. In the G/C, there's still room for another pop-up, but we'll see what happens here. In the 120-minute chart, the MACD's turning down, stochastic's turning down, but they're still basically in positive territory, and the E-minis are holding the 9-period exponential moving average. So I wanted to go through what I've decided to do as much as I can is I'm going to run all the numbers down. Then I'm going to quickly go in the first segment to as many charts as I can, especially on a Friday when it's Technical Friday, and we are starting to look at weekly charts. Also, I received an email just a short while ago. This is a very good friend of mine. For a long time we've been good friends, and we play tennis together. We play tennis to the death. I mean, we play quite a few times a year, but when we play, it doesn't matter whether it's 1 hour, 2 hours, or 3 hours. We play to the death. That's the way it is. Every shot we try to oust one another, and that's I just got an email to say that Yesterday, President Barack Obama intends to nominate MIT's Mark Kastner to head the Department of Energy's Office of Science, which manages much of the nation's basic research on energy. He's just a fabulous guy. He's been the dean there, dean of the physics, dean of sciences, to the head of the physics department, and I'm thrilled for him to be nominated, to be able to do something, and he understands a lot of what's going on. We'll see what happens. So congratulations. So this will be to head the DOE Office of Science. Now, of course, he still has to be nominated. This is just a nomination. He still has to be selected. And then another thing last night, just happened to see someone else, colleague and good friend from back in the Noon Conservatory days where I did my graduate degree, Hankus Netsky. Anybody from the Boston area knows Hankus. He's just everywhere. Just a fantastic musician. He's head of the Improvisation, New England Conservatory of Music's Contemporary Improvisation Program. Was named by a magazine as one of the most influential people and musicians, actually, in the country, and nominated for this for 2013. Greatest impact on the world. Well, how about that? He is a fantastic musician, just an all-rounder. And congratulations, Hankus. So, here we go. Dow's up 51 at 15,927. We're in the 15,900s. That makes the 15,990s really, really important. Why? Because the moment we cross the threshold of 16,000, that millennium mark, how you do it, you slice through it. It means goodbye 15,000s for a little while, and we could run all the way into December. You get repelled, and you have a lot of resistance in this 15,900s area. Remember, we've got 28 days to go. This is the 27th. We've got up until Monday in the match between the rally in July up to the August 2nd high, which had up until now been very, very similar to the Dow's chart. We'll get there in a moment. Let's just continue. We've got 1794 in the S&P cash at 344, up 344. You've got the comp index only up 5 at 3978. Kind of a mixed market in many ways. But what I've done for my opening call subscribers, now we are back to all long. I tried shorting yet again the IBB. We've had nice profits with it. We've actually had many intraday profits that I didn't take. I wanted the big picture was for the biotech NASDAQ biotech ETF iShares to decline. I suspect that they've been pushed up quite reluctantly. That's what my eye is telling me. So it's still on my focus to be able to go back there as a short. I'm staying away right now because we got stopped out. What is it, 2% and a 1% loss? It's not a big deal, but it is a big deal when it starts to add up. Number one. Number two, it's a big deal for me because when I looked at the chart, let me just show you something here. I'll just put the two charts together, IBB. The fact is that I had a buy signal in the 120-minute, which I was ignoring. I ignored it for a reason, because the daily was really showing a lot of weakness. But that just said, hey, you're walking the 9 EMA. Chapman, you gave a class on exactly this. What is wrong with you? There's a left side, right side price time match, and it should go back to the candle of the 10th of October at 11:30, which has had a high of 212.80 and a low of 209.22. And right now it says 211.19. Dodo, come on. Anyway, that's the way it is. All right, now let's do something else. We've got you've got gold up 60 cents at 12.86. I'm looking at gold real closely, and I have to tell you something. Well, I'll do that right now. GC, I'm still sticking with Z for right now. Just it's easiest for me. I still consider these are just bumps along the way towards 11.99. 11.99 to test the 11.82 level. Now, am I looking at something that I call, for those who did my webinar on Friday, I sent out yesterday, I sent out the curriculum. This is a set curriculum. Monday, I'll be sending out the chart formations that I said I would send to you. You remember I spoke about the internal low and the residual low? Folks, I've done this over decades. It's something that I noticed in markets. that you can get an internal low where everything technically is terrible, but then it gives you a climactic low that turns around and bounces. And that bounce can take 6 to 8 weeks. Sometimes it can take more, but there's an H pattern and it comes around and then it does what's called, I call the residual low, where it does a retest like an H pattern. And you can get them at tops as well, but mostly I look at them at bottoms, where you get the internal low, which just flushes out everything, so that by the time the residual low comes in, almost all the selling has been done. This is purely emotional. I'm not sure how, I have it pictured in my mind perfectly. I'm trying to explain it articulate it in words that can be pictures as well. So think of a lowercase h and you come down. It gives you a massive sell. And because of it, all the sellers are out at that particular time, but it isn't finished. The momentum to the downside is still so great that there's a minor bounce. The bounce in this case hits the 9-period moving average, just misses it actually in the monthly chart of the gold contract, and then it pulls back. On the way down, more news comes out, but not nearly as bad as it used to be. So that when it makes the next low, that low is not accompanied by as bad technicals, but the words, the headlines could be really bad, but that's just emotional stuff. So I'm looking at this and say, will that test be a really important test in the gold if it does that? And that test can be just above, right exactly at, or just below the previous left side low. It's almost like the H pattern, but this is what I call the internal residual low. And that might happen to gold. Why? Because if it happens to gold, then what we're looking at is that the gold here will break under the candle of last month, the doji candle with a low of, you know what, if you don't mind, I'm going to go to the continuous contract. It just gives me so much more information. It'll break below the low of 1179.40. That was the low back in June of last year. Now, it either gets there or it holds the low of the candle the next month, which is 1207. Now, the real point here is that if it slices through 1140, then you've got yourself a left side, right side price time match going to next year, and that would take you to 1084. The prices are very close to the whatever contract you're looking at, but this is the continuous contract. The price actually will be changing in the continuous contract, so I'll say the low of February of 2010. Okay, that's number one. Number two is, if at any point there's a successful rally that doesn't go through the low of last month, but instead goes through the high of last month, this month in November, if it goes above 1361.80, let's call it 1362, then 1381 become the 9-period exponential moving average. But you're still then looking at an H that goes to an M pattern. So my overall perspective says that gold essentially is still not the place to be. For trades, absolutely. If you see a trade, good. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just finish the numbers. Dow's at 51. So we've got bonds. So gold itself, trading bounces, absolutely trade them. Stocks, actually, gold stocks are they're quite alive now in that they give very nice percentage gains when they pop up. But I would just keep trading stops real tight. Crude oil is up 16 cents. High-grade copper is still in the 317, 316 area. I'm a little concerned, but I'll just keep watching. In the meantime, bonds are down 330, down 3 ticks at 132 and 14.30 seconds, and dollars down 12.30 seconds. So we're going to go straight to our first caller. We've got Garrow in Newport Beach, California. Hi, Garrow. How are you?
Very good, sir. How about you?
Very nice. Thank you.
All right. Today, I'm calling regarding Simon Property Group, SPG.
And you
yes,
have already got in, right?
No. I got him yesterday at 30 minutes when it crossed the linear regression line. Was $151. I bought it there. I have 300 shares, and I'm holding it. And I want to get out at 154.
So
154 and change. Today, on the daily chart, it looks very good, but the weekly chart is so-so.
Exactly right. Exactly right. But what I'm showing here, which is even more important, I'm showing two things. I'm going to show a pattern that has a left side, right side price time match. It's called the cup formation. So if I do that and I go to the gap, that's normally what I would go to, which takes you to the 153 153 to the 154 area, which is your target price. If I go to a left side, right side price time match, and this is going to be really interesting. Here we go. I'm putting in that, and I'm putting in, which reminds me, I needed to talk about a United States Steel X, and I'm going to do that in a little while because I was hoping for it to pull back to add to our long position. Instead, it's just moved up higher. And I know we have a caller that we were speaking to earlier in the week who was looking at this, and I thought it would give him a pullback for an opportunity for his call position. So I did this talking at the same time. I wanted to show you that there's a chance that by the 8th, what's today? Today's the 15th, 16th, 17th, by Monday at 1:30 in the afternoon, there's a chance that this could get to 154.90. Now, right. In your analysis, and now I'm going to do something else because I've been including this, going back to this. I stopped using it for a long time, but I went back since you've mentioned it. If you use the SAR on the one, that's the parabolic SAR, on the 120-minute chart, you will find that not only have all the technicals turned very positive, there is a resistance at 104 to 104.09 based on the methodology that I'm using. But the SAR crossed, and that was a very good. I don't know if you do it on the 120-minute chart or the 60-minute chart, Gara. But that's where it crossed.
On monthly chart. On monthly chart, the 3 months, $155 and up is a buying point.
Okay, but on the 120-minute chart, which is the intraday, much shorter time frame, that gave your exact, it gave a crossover, gave a whole bunch of good signals. So I'm going to do this. This is exactly the kind of case where I'm saying to you, look, you've got a fabulous methodology that says, using my technique over and over and over again, I am able to buy or to short, and my expectation on the number of shares that I trade, based on the fact that I like triple-digit, I want high-price stocks, is about 3 points, maybe 4 points. Now what I'm saying to you is the action that I'm looking at here, both on the 110 and the 10-minute charts, is just about to come into a little bit of resistance. It's at 153.50. SPG is the symbol. Simon Property Group, one of the real biggies in the REITs complex. But I'm going to suggest what I discussed with you before. You've got a target. I'm going to say take that target, and whether it's on paper or whether it's in real, just a small portion is held back with a trading stop. And that trading stop says, where would the next visual icon on the left be a really good exit level? And my looking at it would be 154.83 was the low of the candle. That's where it closed, not the low itself, because the low was 154. Sorry, 154.83 was the low. 155.32 was in fact the body of the candle. So I'm saying, take something off if it breaks above it, and then when it gets towards that particular level, you can just take it off and say, hey, I'm learning how to just add a tiny little extra percentage to my trading plan without breaking my rules, because the rule says that whatever you get out of the initial area should be the stop for the extension going up. Right. Is that clear?
Yes, sir. Absolutely. Thank you.
Okay. Have a great weekend.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's up 48, S&P's up 299. Discrepancy there. 500 stocks are only up 0.17. The Dow is up 0.31. We're going to watch this real closely. I had said to my subscribers this morning, sometimes I give an options trade. And I thought, gee, what would be great is if I just didn't have time to really think it through carefully enough. And I thought that the Dow Diamonds, the DIA 190 puts on a sharp spike up would be a great opportunity. I couldn't do it. I don't know if it'll even work out, but because I like to spend quiet time. I thought I would have that this morning, but instead there were other things. I wanted to give a quiz to my subscribers on the counting the peaks, a whole bunch of things. So that was priority for me. I'm going to do. We've got callers waiting. I just want to do 2 quick things, please, if you don't mind. Ari had called yesterday looking at the IYR. I'm going to suggest, Ari, you also look at the RQI, which, in fact, the IYR had gone to a peak F. The RQI has almost the same pattern, and it's the Steers, Cohen and Steers Quality Income Realty Trust or Fund. Slightly different price formation. Just want to double check the 90, yeah. So that's the way I'm looking at that, and that is 30.30. So it's way lower price. It's at $9.90 instead of the triple digits. That's number one. Number two is X. I'll try to get to a little later on. I must apologize. I thought that it would pull back with a covered call discussion the other day. Instead, it's going to the trend line that I noted and said there was a possibility to go there, but later I thought it would give us an opportunity to get the leg D and trade it as, we've got it as a core position from the 21s. It's at 28 right now, US Steel X, and I thought there was a chance, and I apologize. You have to have a different strategy now, but it is rallying very strongly. It's at 28.22, but it is leg D, and a lot of charts are doing this. So those are the two very important things I want to discuss, and I'll get to BKW in email, and I'll talk about that in a moment. That's Burger King. Let's go to Neil in Portland, Oregon. Wanted to look at, hi, Neil, how are you?
I'm good, Basil. Hey, you?
I'm very well, thank you.
That's great. Basil, I just wanted to check with you on the VIX. I'm trying to figure out where we are, what it means for the market, and I'd ideally like to go long the VIX. I'm wondering what your recommendation would be as far as the best option to take on that.
Okay, now I'm going to talk about this in two ways. One is exactly what I see in the volatility index as a separate entity to how I would consider trading it. So number one is, there's a pattern that I always look for. It's the H that goes to an M pattern. Folks, the volatility index, there are many ways of reading it. Mine is the simplest way that I can think of. I treat it only as buying pressure and selling pressure. To make it more complex than that, I just don't find that it is beneficial to my way of thinking. And everybody has their own ways, and that's great because it's how you read it and how it's helped you in traveling through this market that it, to me, is the most important thing. And all I've said is that the volatility index in the low teens is buying pressure. The moment you go to the 12s and 11s, what you're looking at is an intensity, but it also tells you are starting to get close to where historically, now let me just show this in the weekly chart, the VIX is trading at 12.18 right now, down 19 cents. If you look at the UVXY, which is 200 or 300%, I think it's 200%. Oh, is it 300%? I don't want to do that. Well, I won't. Just if I say it, I should know what it is. I've traded it before. I don't know why I'm short. Ultra short. So this is 200%. So the volatility index shows that it can go. It hasn't been to the 11 since back in 2013, back in the February-March period. Bounced all the way to 21.91. Not a big deal. I mean, it's a big deal percentage-wise, but not historically, because this thing has gone all the way to the 40. Remember, there was a round number 45 high, and then it was 48. I believe it was, 48 round number high back in August of 2011. Now it's making this pattern that constantly goes into the U shape. This U shape is a little quicker, so it might be a double U pattern. And that says that we are very close to some kind of a turnaround in the volatility index. If history repeats, and the low today is 11.99, the last one was 11.05, and if I show you a chart, you will not believe this, but you can stay down in the very low level for a long period of time. Look at this monthly chart. There was that whole period back in under 20, where the VIX was under 20, all the way from 2004 until it broke out in the summer of 2007. It went all the way down to the 9s, 9.39 in fact. So let's put this into historical context. Buying pressure is pervasive. And as far as question of the day is, Basil, longer term, what is this doing to the VIX base? I have not yet changed my numbers on the VIX. There might be what used to be, I used to say below, gosh, I can't remember. I think I said below 32, certain things happened. Then I made it below 25, and then I made it below 20, and it's been below 20 now for at least 2 years. I mean, at least since the breakout in October of 2011. Yeah, it's about 2 years now that I've been talking about it, pulling back into the teens and under. I suspect that this move down right now, in fact, I would not be surprised, based on my work that I do in my daily chart. Now, this is part one is that I wanted to say the VIX can stay down and especially even in the 12s and 11s, and then go lower. And I can do that for quite some time. We've seen that. I just showed you in the monthly charts. Now, even more important is the rhythm. And that rhythm says, I've got a rhythm from the January of 2009 when it was on its way down. This would be a first target. And that says that somewhere in the March of 2014 area, we could see, and that means you'll have to spiral higher sometime in January, February or something. That's the way it would work. That sometime in March, there will be a rise, a rally, and that goes into the 30s and even higher to the 40s. If I use another metric, that can be extended another 3 months to May. Okay, so now that's the longer term. Let me use the weekly chart for the intermediate term. Intermediate term, when we've had pullbacks from major tops, you've gone for at least 1, 2, 3, 4, 5, 6, 7, 8, 9 before there's been a big spike. So you've got 1, 2, 3, 4 months, 4 weeks, then there's a spike. Then it goes 1, 2 and a spike, 1, 2, 3, 4 and a spike. Here it goes 1, 2, 3, 4, 5. If you're looking at the charts, folks, it goes 6, and then the 7th month in August of 2003 starts a big rally. And now we've gone 1, 2, 3, 4, 5. So in the context of the number of weeks going down before there's at least a reversal, we are within this week to next week, so probably within a week of some kind of reversal to the upside. It doesn't even say how much. It just says some kind of a reversal to the upside. Now let's go to the daily. The daily says we've had a leg A, then a leg B, and the little mini A, B, and together you've got a C, which says there's a chance that over the next couple of days, you might even make a nominal, if there's a bounce on Monday above 11.99, on Tuesday, you might make a nominal new low. I'm anticipating, based on my left side, right side price time match, number one, I'm anticipating on a number of charts, which I will go through very soon, that we are either going to break out so decisively that 15,690 is not even a stopping point next week. It just goes right through. Or, as I'm anticipating, we're just getting to the area that says, be a little bit careful. There are just way too many individual stocks, very important stocks, that are on leg D, E, or like the Dow right now, which could recycle. This could be B and not F. But if it's an F, we will know very quickly, because an F pattern says there should be a pullback by Tuesday. And that pullback by Tuesday should take you under the red line, which was the resistance that what we were looking at, should take you under 15,850. That's only 60 points away. It's not it's only 60 points away. If it does that, and by Wednesday there's another very ugly down day, I suspect that we've made a top that matches to some extent the top that was made on the 28th session of the bull rally that started right there on the 26th of June and ended on August the 2nd. But here's the other thing. In this cup formation, you've had one huge cup from May pulling back and then going up to August. Another one in also left side, right side price time actually went from the 2nd of August down to the 28th of August in the Dow up to the 17th of September. Now you're making another one with a slightly similar pattern, not to the last one, but to the one in May. And it says, I've walked the 9-period exponential moving average. It is not that often that you get 3 exact patterns that turn out to be a 4th exact pattern. Usually by the time you get to the 4th, and this will be the 4th test of this particular resistance area, and it says, if there's a breakout from here, and you can go back, the 15th of November last year was the low that started the rally into the end of the year. The 15th of November today is the exact opposite. We're going to a high. I have no idea if the relationship will work, that the previous low was now going to be a high, because dates often repeat. But I'm looking at this and I'm saying, in my opening call, we now only have long positions because we were stopped out of short positions. Small losses, but losses nevertheless. I hate to take losses. There are some stocks that are acting very well that are in the portfolio. I'm trying my best to isolate the stocks that look good, especially the lower priced ones that are coming off a nice base and the ones that are extended. I'm looking towards the short side, and all of that says to me that I mustn't get too carried away by looking at the VIX. But it is possible right here that if you were prepared to risk at $12.25, would you trade the VXX or the UVXY?
The UVXY.
So let's go to the UVXY because you will see something very interesting here. The UVXY trading at 20.99, down 31, down 1.46%. The Dow is up to 20.27. So there's your relationship there, much greater relationship of selling pressure. Selling pressure in the VIX, but that relates to me. I call it buying pressure. But in something that now, I don't recommend anyone else do this. I drew this pattern much earlier on as I was starting to get ready for the show. It's the 1 minute chart of the UVXY. And the UVXY has a 20.82 low at 28 minutes past 10 this morning. It has a bit of a rally. It goes to leg A, goes to B, and then it hangs around in the rectangle formation. It has a successful H test because it doesn't even come close to the low of 20.82. Instead, it comes down to 20.89, and now it's hit the 200-period exponential moving average. I'm going to make the suggestion here, and you've got to realize how quickly these things move. I could say it to you, and by the time the show is over, you could be out of the position. I would nibble at 20.98, and I would have a stop at 20.80. That means that if you were in it and Sunday evening was a real big move in the futures, this thing will gap down in the morning and you'll be vulnerable. So I want you to keep that in mind. But if you are long stocks in some portfolio, maybe it's an IRA or whatever it is, and in the terms of kind of a protection, I would say right here, based on my work saying that today or Monday should be some kind of at least a short-term top, because if it isn't, we're going right through into the 15,600s. This is the best risk reward, and I'm saying for a mere 15 cents, let's say, on a $20.98 stock, you will know, but you've got to keep in mind there's a chance that if Sunday evening overseas, the futures are up sharply and they come in sharply on Monday morning, you are vulnerable, and that's the most I can tell you. Now, am I saying that this is the major turn in the volatility index? I cannot say that. What I will say is, going back to the VIX index, and a lot of people ask me this question, so I'm going to spend a little time on it right now. Based on what I do with the volatility index, the H pattern that breaks the left side low, and that was 12.34, so this is purely technical, I'm not doing anything else. 12.38 was the low on the 18th of October. Yesterday's low was 12.28, but it closed at 12.37. That says that the low today, underneath, if it closes back into the 12.35 area, that's the sign of the H pattern that might be a successful test. I'll be right back with Neil and Portland. Neil, can you hold on? We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Folks, we are back and we are on with Neil. We're looking at the volatility index. So, Neil, the way I'm looking at it, I've actually drawn on the chart the kind of pattern that is a possibility. All I can say is it's a possibility because that's what we do here. We look at possibilities and we gauge it. And what it says is that the volatility index, the VIX index, has just gone, as we're speaking, from, wow, look at that, from the 9-period exponential moving average above it, and in the 1, 2, 3, 4, 5, the 5 minutes of the break that we had, it's already up 12, 13 pennies. So I'm saying to you that that moment that we were talking, and even here with a stop under the low of today, I would say that that is a risk-reward possibility. The rule of the Chapman wave methodology is that the H pattern, when it breaks the left side low, the bar that does it, the best case scenario, goes underneath and then goes back and revisits the arch formation. That's above 12.35 cents in the VIX index, and then does not go back and retest the low, but instead goes to the next level, which will be 12.77, the 9-period exponential moving average, and then goes peak to peak after that, and that's the only way I can do it. 13.35 is the next. 14.14 of the 7th of November would be the next. And normally you would not break above it. You'd have to come back again in this pattern if you don't take out the arch high, in this case 14.36. Instead, if you fail, you'll come back and retest the lows. So this is what I'm saying. It's the best risk to reward based on a number of things. So I hope that gives you some sense of what I'd be looking at.
No, it's great information. I appreciate it very much.
Thank you so much for calling, and we'll, of course, be following it up on Monday. So good luck and have a great weekend. So, folks, this is what I want you to do. I want you to show the Dow Diamonds a leg F, the SPY. Now, this could all recycle, leg D. And technically, they are strong. I can't deny it. And Qs, remember, we had the C1, peak C1, C2, went to leg D yesterday, and it extended today by, no, it didn't. 830, 83, 86 parallel highs is still in leg D, but it is D. And the MACD is not that great. The stochastic's good at 83%, but it could turn very quickly. I don't have time for the weeklies. We'll let the week finish, and on Monday I'll do the weeklies. That's going to be really important. Looking at, that was the question. I want to get to it, and that was BKW. I think it was BKW. I hope it is. Here we go. Burger King. Yeah, the question is, nice profit I took in this one of subscribers. Where can it go now? I'd hold off because it has to, BKW's Burger King, the monthly chart is still very good in leg B, but it's an IPO, so that's out. And the rectangle formation we're looking at in the weekly, I would say hold off for a little while, because if it takes out 20.20, it's going to go a little bit low. So now let's go through this again. The New York Stock Exchange, NYA.X, look at that. I don't know if this is leg F or brand new leg B, but the weekly chart went to leg D. Now we've got all the ducks in order to say, at this point, we can start to look to see if we're going to get turnaround to the downside. Doesn't have to happen. Closing this good in the monthly charts in November says so often you go to the highs onto the 31st of December. I just don't know yet. So tomorrow's Monday and Tuesday are going to be really important. The monthly chart of the NYS has not gone to 10,387, but it is a strong leg D. It's got until next month to get to that in the left side, right side price time match. It's doing really well. It's at 10,158, 230 points below. So now let me just give you a quick summation of what I'm looking at. We'll do some work over the weekend. I'm working a number of papers to give to subscribers. So here we're looking at the Dow. Let me just do this quickly as we're going out. That if the Dow by the end of the day closes below 15,870, to me that will say just a heads up that we could start to see a little topping motion Monday and Tuesday, because you've got that left side, right side price down match that I showed in the daily chart. And now let's see what happens. If it breaks decisively above and closes 50,090s, that's good. I'll be...
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.